Hi traders, welcome to Monetize. It's time to record the new weekly forecast video. And I'll be covering 6 instruments in this video, namely dollar index, gold, Nifty, USDCAD, GBPAUD, and CHFJPY. So let's begin with dollar index. As usual, starting from the monthly time frame, but instead of MACD, I'm using RSI today. So let's see what are the conditions on monthly chart. The monthly remains bullish, no signs of slowdown because we do not have any bearish divergence on the monthly, and the RSI is still pointing to the upside here. And let's mark the Fib extension starting from the lowest level. First upcycle marked, and now I'll be marking the second upcycle on Fib extension and making it green. So the duplication is around 119 to 121. So in raw number, we can say the next upside target would be around 120 for dollar index. Moving to weekly now. Based on the weekly, a slight slowdown because we have equal top on RSI but higher high on the price, the candles. So not a strong bearish divergence, just equal top on RSI. Let's mark the base and the breakout structure based on weekly. So this is the BOS level and the base is here, starting from this candle. This one. So let's do Fibonacci retracement marking starting from the base to the recent high. And moving to daily now. As per daily, I do not see any bearish divergence, higher high on RSI, higher high on the chart. So just a pullback to the Fib retracement levels. And the favorite zone as per the Fib is 50 to 61 and 61 to 78. So this is the first favorite zone and this is the second favorite zone. I would also like to mark the volume profile starting from the base level to the recent high, but unfortunately I think volume profile doesn't work on dollar index chart anyways. So this is the scenario on daily, waiting for the pullback to be completed and it will start rising again. Moving to 4 hourly. On the 4 hourly, after this higher high formation on the price and lower high formation on RSI, so it was bearish divergence condition, and we also got the breakout structure. After the breakout structure, it went up for the retest and started going down. So ultimately we still have room to the downside because the RSI has not reached the oversold region and it's still in the what do you say, this is 1 second, yeah, so it's still around 38% Fib level, so a good probability that it will reach 50 or 61 and then it will start rising again. So in the short term, dollar index may come down, it may retrace a bit more, but in the longer run it remains bullish and the ultimate target for the coming days and weeks is 120. Moving to hourly, as per hourly, again we have lower high formation and equal high formations, which is not a great sign for the bullish scenario, so it may continue downwards. Let's do one thing. Let's mark the fib from this high to the recent low. So until it remains under this area, this is the fib 61 to 78 area to the upside. So I mark the zone. So until it remains below 113.30 or 29, we can say it may continue downwards for the very short term, but ultimately it is bullish. We have lower low formation on RSI, lower low formation on the chart, so no bullish signs as of now. So in the short term, we look for the sells, but very carefully, because the higher time frame is still bullish. I'm moving to the next instrument, which is gold. Let's start from the monthly. On the monthly, everything remains under pressure, bearish pressure. So still flowing downwards. As per the monthly cycle, starting from this low, first high, I'm marking the upward cycle on the fib extension. It reached 1.618 after touching the 300%. That is the completion level of the upward cycle. Yes, so 1.618 is 1650, but RSI is still pointing downwards, so I believe it will continue to complete the downward cycle, and the ultimate target would be around 1448, which is the Fibonacci 100% extension level to the upside. Let's also mark the Fibonacci retracement level. So starting from the swing low to the swing high. Yes, so we have a duplication zone here. So Fibonacci retracement 61.8 and Fibonacci extension 100%, they are coming together around 1450. So there is a high probability that gold will reach 1450 in the coming weeks and months. Moving to weekly now. On the weekly, it has broken below this area. It also gave a weekly closure below the support area, and now RSI has reached, it has reached to the oversold area, and that's it. So it's time for the pullback, and the pullback should be taken as an opportunity to sell in the coming weeks and months. So I would like to mark the fib retracement from this high to the recent low. Now I'm moving to daily. On the daily, we have bullish divergence in play, lower low formation on the price, higher low formation on RSI. So definitely we are seeing some bullish scenario in the gold because of the bullish divergence which has come into play. And I've also marked the fib levels starting from the recent most top to the recent low, and we have some interesting levels which we can target in the coming days. So the first level is around 1706, followed by 1731, and ultimately we have 1764. But let's mark the volume profile from the recent high to the recent low to see the cluster of high volume areas levels. So this is one definitely, and again we have the second level which is around 1730. So there is a good probability that in the coming days, because we are we are hoping for some weakness, we are anticipating some weakness in the dollar index for the very short term. So so I think so until the dollar index would remain under pressure, gold may bounce higher to 1730 and then continue downwards. Moving to 4 hourly. On the 4 hourly, again bullish divergence. Even on the last leg we have lower low formation. This is the last leg I'm talking about, and higher low formation on RSI, so bullish divergence. Then the breakout structure. After the breakout structure, made a retest and started continuing higher. So what are the levels now? And we do not have any bearish divergence. So higher high on the chart and higher high on the RSI as well. So in the short term, I would look to buy the dips as dollar index remains under pressure. So it should be a bullish scenario for the gold in the coming days. So we have an interesting level around 1640, and ultimately if I mark the fib retracement from the recent low to the current high, we have bearish divergence on 1 hourly but not on 4 hourly. So definitely when the market will open tomorrow, we will see some pressure in the initial days, and please be cautious because it is the first week of the new month, so it's a NFP week. So during NFP week, market is usually volatile. So anyways, I'm looking for the dips to buy in the short term. So an interesting level to get into buy trade would be around 1640. So this is the plan for gold in the coming week. Let's buy around 1640 with the target around 1700 followed by 1730. And the next instrument I'm going to cover is Nifty. Nifty SGX futures, and here is the chart. Starting from the weekly, as per weekly, we have broadening wedge formation, a gramophone formation. So it looks like maybe something like this for the coming weeks and months. And as per RSI, everything is bearish. As per the charts, everything is bearish. Let's move to daily. Higher high formation, lower high on RSI, bearish divergence scenario, breakout structure. So after the breakout structure, it's time for the retracement. And because I'm anticipating that dollar index will remain under pressure for the very short term, maybe for the initial days of the NFP week. So when dollar is bearish, it's a good sign for the stock market. So indices should rise. So let's start from this high, mark the fib retracement from this high to the recent low, and we can anticipate a rise towards 1 minute. Why this is coming in between? Yeah, so we can anticipate a rise towards 17,450 or maybe 400, and then continuation lower. RSI has already reached into the oversold area, so a short-term pullback is highly probable. Moving to 4-hourly. On the 4-hourly, we have bullish divergence, a slight break of structure. A slight break means it's not a convincing break because we just got a spike above this level, not a full candle closure. But anyways, the level is broken with the spike, so it's a sign. See, on 1-hourly we can clearly notice a higher high formation and a higher high formation, so there is no divergence. So it means a pullback should be taken as an opportunity to buy just for the very short term, and we can target the next fib level, that is around 17,400, and then continuation lower. So in correlation to the dollar, we see in the short term indices and gold going higher. On 15 minutes, it's clearly bullish for the very short term. I'm trying to mark the cycle starting from the lowest point. First push up, a retracement, third leg up, now fourth leg in formation, and continuation higher with the fifth leg. So let's mark the fib levels starting from the so currently we are sitting at Fibonacci 50% retracement level, which is also coinciding with the higher time frame Fibonacci level. So it's a magnet zone which is around 16,948. To round off, we can say 16,950, and we are witnessing that market is taking support at the current level, and even if it drops further to 16,809 or 16,800 in round number, should be taken as an opportunity to buy the dip for the very short term. So please trade very cautiously when you're buying stock indices or gold, because ultimately the higher time frames, they are bearish. It's a very short term scenario. When the new week starts tomorrow, we'll find a short term rise and then continuation to the downside. So if you're buying for the very short term, please trade it very cautiously with strict stop loss. Now it's time to move to the currency pairs. So the first one I'm going to discuss is USDCAD. Monthly, super bullish. Everything is bullish. So no signs of slowdown. Market is rising higher, price action higher, and RSI is also higher. And this is the cycle in play. First push up, corrective leg down, third, this could be the fourth leg. So we still have room to reach to the top of this fourth leg, which could be a sideways movement. So even if it is a sideways paddle range on a monthly chart, it has good room to the upside, maybe to the round number 1.50 in the coming weeks and months. So monthly is bullish. Moving to weekly now. On the weekly, let's start the cycle count from this level here. So it's okay. So it's bullish on weekly as well, starting from the swing low on the weekly, first push up, and now marking the Fib extension of the first cycle. So currently it has reached Fibonacci extension 1.61, and ultimately it will complete the cycle around 200%, which should be 1.4162, and based on monthly, the 300% cycle completion level is around 1.50. So as per monthly, the ultimate target would be 1.50. As per weekly, the ultimate 300% extension target of the current bullish cycle would be around 1.50. So this is the level I'm talking about. Okay, now let's move to daily. On the daily, we have higher high formation, no signs of slowdown, bullish candles, and even the RSI is rising to is pointing to the upside, and we have a base around this area. So let's mark it with blue color. Okay, and everything looks bullish on the daily. Moving to 4 hourly now, everything is bullish, and the 4 hourly base is around this area. It has also retested the bullish base on the 4 hourly. After the breakout, we have a spike into the supportive area and everything remains bullish. So what I'll do, I'll take my fib extension, start from this base to the first high to check the extension levels of the current cycle, and let's differentiate it with okay, let's do it green. Sorry, we already have green, so let's do it blue. Let's mark it blue. And I want to check the duplication. So duplication is here, so around 1.3963. To round off, we can say 1.40, and ultimately the round numbers, 300% extension and 200% extension cycle would be coming to an end around 1.4165. 1.4162. So ultimate target zone is here. So if we buy at the current levels starting from here, let's keep the stop loss below the 4 hourly support zone and ultimate target here. So the risk to reward would be 1.77. So it makes sense to buy at the current market price, stop loss around 1.3638, target around 1.4116. So USDCAD covered. Now the next one is pound Aussie. So GBPAUD. Starting from the weekly, it made an impressive comeback during this week. It looked ultra bearish in the last week, but now it has completed bullish divergence with a massive bullish candle, weekly bullish candle, massive pin bar and full of bullish power. Now the next level as per the weekly chart is here. So we have marked the upcoming resistance. Now moving to daily, it has already cleaned and it has already broken above the structure level with massive bullish power. Everything looks bullish on the weekly and on the daily as well. Moving to 4 hourly. Even the 4 hourly looks bullish, and we can mark the current level of support. And moving to 1 hourly now. On the 1 hourly, we have marked this base area, and this is the cycle in play. 1, 2, and now we have leg number 3, which is in play. So ultimately, let's mark the Fib extension, starting from the lowest. In fact, this is the first high. Okay, so where is the Fib extension level? 1.618. So it has already broken above Fib extension 100%. So the next level in sight is 1.618 on the extension level. So as per the price number, it is 1.7865. So in the coming days, I would target 1.7865, and from 1.7865, it should come down for the corrective pattern, and then continuation high towards the extension number 200, which should be around 1.8194 in the coming days. So in the short term, I would look for the dips to buy. Switching to 15 minutes. On the 15 minutes, we have a slowdown scenario, higher high formation, and almost equal high on RSI. So any pullback towards this area should be taken as an opportunity to buy. So we can buy the dips. So we can buy around this area with the stop loss below this support zone, and the target would be Fibonacci extension to the upside. So I'll take it to the 1.618. So the risk to reward in this currency pair would be around 2.88 with a good gap of the stop loss. Like I've taken the stop loss into consideration, which is below the current support. Okay, so we have good room to the upside with a reward of 2.88. So pound AUD remains bullish in the coming days. And the next currency pair which I'm going to cover is CHFJPY. Starting from the monthly. Monthly still looks bullish to me because as per RSI, we do not have any signs of slowdown. So let me mark the Fib extension from the monthly swing low to the first high, and then after the correction we got, okay, so now currently it has reached Fibonacci extension 1.618 as per monthly. Let's see what's the scenario on the weekly. Weekly, we have a slowdown as per the weekly pattern because we've got a doji here, then again we can say we have a bearish candle here with a good spike on the top, but this candle is again a doji type candle because the main body is less than 30% or 1/3 of the entire candle. And now even the third weekly candle is almost a doji. So not a very strong sign either to the upside or the downside. Let's check on the daily now. Yeah, on the daily, bearish candle, rejection at 1.618 area. Then after this bearish candle, we have the confirmation. Let's mark the fib starting from the top of this bearish candle to the low. So it retraced back to 61.8%, and now again a bearish candle at 61.8%, a bearish rejection. So a good sign that it will continue lower in the coming days. But the problem here is the entire price action is locked within the boundaries of this one big candle. So one big candle has locked the entire price action in the current week. So if you're selling, you can protect with the stop loss here. Your first target should be the low of this area, this candle, the big candle. And if it breaks, then ultimately it should continue to the next area. So marking the fib. Okay. Let's also do volume profile. Let's check the volume profile. Starting from this low to the recent high. Perfect. So everything looks bearish to me because this is the high volume zone, which is coming in between our favorite zone, Fibonacci retracement 61.8 to 78.6. So first of all, it should break below the lowest point of this big bearish candle, because currently the price action is locked within the boundaries of one single candle, which is not a very healthy sign. And we have also seen that as per the weekly time frame, we have got 3 consecutive doji candles. So not a high probability setup, but still looks bearish to me with the current daily bearish candle. And if it breaks below 143.53, then ultimately the next target would be around 142.5 to 140. So let it come down to this area, and then we can look for buying in the upcoming days. But currently in the next for the week opening tomorrow, I would be looking for the short-term sells. I'm moving to 4 hourly. If I want to take a short position from the current price level, protecting above the recent high, and let's target $141.63, which is the mid of 61.8 and 78.6, and this, as per the volume profile, the highest volume area level. Then we'll be getting a risk and reward of 2.19. Okay, so this is the plan for the upcoming week. I hope I've explained all the charts clearly. If you still have any doubts, you can get back to me. And guys, please show your support. Subscribe to my YouTube channel, like my videos. It helps me, it keeps me motivated, and it definitely helps in better circulation of my YouTube videos. Thank you, and have a profitable trading week ahead.